Good Wednesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you. Happy hump day to you. Hope you had a great Wednesday. The weekend's right around the corner. We can see it and smell it. We definitely can. All right, let me tell you what I have lined up for you. We're going to go through, oh man, it was like a repeat of yesterday. Another very, very volatile session. Dow showed good gains. NASDAQ showed a lot of weakness. Going to give you all the reasons behind it. We had some big movers going on today with Advanced Micro Devices and a few other of the big names, NVIDIA, so on and so forth. We had Google report earnings after the close. Going to go through those details, and then I'm going to get into our Wednesday financial planning topic. Let me throw a question out at you to get the show started. If something happens to you tomorrow, would your family actually be protected? Or would it just be confused, fighting, so on and so forth? Well, today I'm going to be talking about the biggest estate planning mistakes I see every single day and how regular families can avoid them. I'm not going to go through any legal jargon with you, just real talk about protecting what you have built and preserving your legacy. And remember, folks, you do not need to be wealthy to have an estate plan. You absolutely don't. It's one of the biggest misconceptions we all see. And so we're going to go through some very, very important things, such as what estate planning really is, why having nothing is often worse than having a bad plan, what happens when beneficiaries, titles, and intentions don't match, why beneficiary designations can override your will, and so much more. You're going to have a great education on the world of estate planning, something that's near and dear to my heart. I've shared the stories with you that what happened in my family when my father passed away a few months ago and what a disaster that turned out to be. And again, learned a lot about it from a personal standpoint, right? But, didn't have a lot of communications with my dad about it. Matter of fact, I didn't even know he had a living trust until after his passing. And then we had to unveil the various problems that were there. But that's a whole nother subject. I'm going to make sure things like that don't happen to you. And that's why I want to go through all of these steps with you. So I'm going to get right to the stock market because I got a lot of things to talk to you about in the world of estate planning. So what happened today? So we go back to the early session in the pre-market. We were strong, up about 135 or so. My first stock update at 523 this morning. Things look real good. Kind of begin to fade going into the open. We're up about 60, 70 points right at the opening bell, if memory serves me correctly. NASDAQ, by the time the opening bell came around, was down a little over 100 points. So once again, it looked very identical to what we experienced yesterday, right? Strength in the Dow, weakness in the NASDAQ. And that diverging markets continue to unfold throughout the entire session today. Now, again, just like yesterday, we were fortunate enough to be able to finish the day with a decent gain on the Dow, but not quite so lucky on the NASDAQ. So remember, what we really faced yesterday was a situation where a lot of the Dow components, Caterpillar and a few other big names, did very, very well, and that propelled the Dow higher. We finished down 166 yesterday on the Dow, but again, if you recall when I summarized the market yesterday with Corey and Dwight, we were down over 500 points at our worst level yesterday. So I consider a 166 loss really a victory. But the NASDAQ yesterday was down 336 points. So let's kind of fast forward to today. What happened? NASDAQ down 350 points. So what should be going through your mind right now is, okay, so what's going on? Well, first of all, it's a sector rotation strategy that we're seeing going on at this point. If you delve deep inside the 30 stocks that make out the Dow, you really see no tech leaders. I'm looking at my list right now. You really see no tech leaders. Amgen was the star today, $26. And again, this is going to include some after hours trading. Amgen up $26.41, 7.8% gain. The company Dow up 5.94%. The company 3M, 5.21. I could go on and on. So what you see is the consumer staples, the consumer cyclicals, pretty much anything non-tech related did really well. The first stock that did well that was in the tech space was Apple. And it was, let's see, 1, 2, 3, 4, 5, 6, the seventh best percentage performer out of the 30 stocks of the Dow. Apple for the day, again, after hours included, $5.92 gain, 2.2% to 275.40. But if we look at the bottom of the list, and again, this is what was very similar to yesterday that I went through on the show with you, and that is, you don't have a lot of stocks that are negative. Matter of fact, let's see, 3, 4, 5, 6, 7, 8, only 9 out of the 30. So we had 21 positive, 9 negative, right? But the problem was these stocks that are at the bottom of the list, again, second day in a row, these are high valued stocks and they have a big influence. So you don't need a lot of them to put pressure on the Dow. Now, I will tell you, let me just get right to the numbers and then I'll go back to my 9 stocks that were down. 160 point gain on the Dow. We finished at a level of 49,501 after touching all all-time high, 0.53% gain. NASDAQ, it lost, as I said, 351 points, 1.5%, and the S&P down 35 points, 0.5%. Russell 2000, now it's starting to participate in the market weakness, a 24-point loss, down 0.90%, closing at 2,624. All right, so what was the problem inside the Dow? It was United Health, right? Not a huge stock, kind of mid-size, but the market pays a lot of attention to United Health. I've noticed on days when United Health is strong, you'll see the market do very well and vice versa. So United Health down $9.36. It's a 3.29% loss to 274.82. The one I don't like to see at the bottom of the list, Goldman Sachs. This is your most expensive stock in the Dow, $914 share price, down $24.99, 2.66% loss. Amazon ahead of its earnings numbers tomorrow, down $4.68. Cisco down $1.49. IBM, see, now you start to hear the tech names, down $5.14. NVIDIA was down $2.83. And Caterpillar, also a very high valued stock that's just been on a tear on the upside, down $10.71. So it was a really tough market to trade today. It was really a tough market to kind of figure out what's really the next move. NASDAQ, we just kind of, brushed it aside. It really never had any periods of strength. But again, as I said, the Dow did. So bottom line, what's your takeaway for today? We're in a sector rotation. This is a time, folks, that you need to absolutely take a look at your portfolio, look at your 401k, your IRA, your children's college education account, whatever money you may have invested. This is the time that you want to take a look at it and make sure you have diversification. I cannot stress this enough because this is no longer a market that is, solely focused on the Magnificent Seven, or the Mag 7 as we call it, right? Offs and NVIDIAs and Teslas of the world. We're not in that right now. Not saying we're not going to go back to it, but right now as we sit today, this is not it, right? They're very terrified of tech for valuations, AI concerns, all the things that we always bring up whenever we rotate out of tech and go into the broader market. So this is the time you want to sit down, go through your portfolio. If, you feel you don't have the time or the expertise, please give our office a call. This is what we do. We'd love to be able to sit down with you and again, we can do a virtual call with you and do an analysis, right? We have the software to just really take a look. All we have to do is have your statement and we can take a look and say, all right, here's your allocation on a percentage basis into, the 11 sectors of the S&P. Are you in the right areas right now? Maybe you're overweighted in tech. And if that's the case, you're probably facing significant losses compared to those that are diversified into the other areas. Are you having, the proper international exposure, right? We got some international markets like South Korea, China. They're doing phenomenal, far better than our markets are. Do you have that international exposure? So just call the office at 800-1801 or go online to sanchezgaunt.com and make an appointment. You can do it right there. And Jason and I will, again, have a virtual call with you. We'll have you send over a copy of your statement. We'll throw it into our software and we'll come back and say, look, you're looking good. You got good diversification, or, you got risk in this certain area. And then we can go from there. So it's really that simple. We don't charge anything for that. So again, you can go to SanchezGaunt.com and make that big move, because we're in an interesting time period, folks. Don't know if this is the beginning of something bigger or if this is just one of these little hiccups that we face in the market. But the main thing is these tech names are moving and moving big. I'm going to jump right in while I'm on the tech names. I'm going to jump right into Alphabet, the parent of Google, because this could have an influence tomorrow. So not long after the stock market closed today, Google or Alphabet did report their earnings numbers. So let me tell you what the stock did. Regular session, let me tell you what it's doing right now in the after hours, and then I'll give you some of the details. Regular session, Google was down $6.67, a 1.96% loss to 333.04. Right now in the after hours, it's down $6.31, 1.9% loss to 326.73. I've been watching it trade anywhere between a $10 to a $12 loss. This is probably some of the best performance right now since the company reported a little after the market closed at 1 o'clock. So again, down $6.22. What were the numbers? Well, the reported numbers that actually turned out pretty good. I'm not quite sure at this point. I haven't had a chance to go through the entire earnings report to give you a real thorough, honest answer why the stock is selling off, other than it's a tech name, like I said. So this is always a telltale sign that we're in a rotation where you got some concerns about tech. When a company comes out, beats their numbers, and they sell it off. So it's that old adage, sell the news, buy the rumor. Here's what Google reported. Earnings per share, $2.82 a share. Estimates, $2.63. Rev, $113.83 billion. Estimates, $111.43 billion. Other parts of the business. Google Cloud, $17.66 billion. Estimates, $16.18 billion. YouTube advertising, $11.38 billion. Now, this was a miss. Estimates were $11.84 billion. Traffic acquisition cost, $16.59 billion. Estimates, $16.2 billion. Now, something, of course, that we've been emphasizing when we talk about these tech names that are reporting capital expenditure. This is a metrics that the street is watching very, very closely. How much money are tech companies taking and reinvesting in the business? Again, we call it CapEx, or short for capital expenditures. This is a big number, folks, for Google. Alphabet said they expect 2026 capital expenditures to be in the range of between 175 billion to 185 billion. Now, the top end of that forecast would be more than double of what they spent last year. So think about that for a second. More than double. Company said in October that they expected a, quote, significant increase in CapEx this year. Boy, have they come through on that one. Where's the money going to go? Well, CapEx is going to go towards investing in AI compute capacity for Google DeepMind and to meet significant cloud customer demand, as well as a strategic investment in other bets. Their Alphabet finance chief told analysts on a call today, she added that it would be used to improve the user experience and drive higher advertising ROI, or of course, return on investment in Google services. The company saw revenue increase almost 18% year over year. Net income came in at $34.46 billion, up almost 30% compared to a year ago. And just a couple other quick things. Advertising revenue came in at $82.28 billion, up 13.5% from a year ago. Revenue for YouTube ads increased almost 9% to, as I said, $11.38 billion, but falling short of Wall Street's expectation, as I mentioned, $11.84 billion. The CFO said advertising results were negatively affected on YouTube from the lapping of the strong spend on U.S. elections in the fourth quarter of 2024. That's interesting to go back that far. Google Cloud was strong, record nearly 48% increase in revenue from a year ago. The business backlog increased 55%. Like I said, overall pretty good. Other than that YouTube, that's the only thing I could find in a cursory review that that YouTube advertising came in a little bit lighter than what Wall Street is looking for. But like I said, there's stocks recovered a little bit, now down just $5.95. So we'll see what kind of impact it has tomorrow. All right, I want to come back and a couple more tech names I want to mention today. We had some major problems on AMD Advanced Micro Devices. Tell you about that. And then we're going to get into our topic, estate planning. What happens if you don't have a plan? We're going to make sure that doesn't happen with you. Stay tuned. Let's turn it over to Kristen Snow right now. Traffic Center. Hello, my dear. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Like I said, a volatile day for all the major averages. I don't think we ever have a day where it's not volatile. It's been a long time. But we finished with a gain of the Dow of 260.53% to close at 49,501. NASDAQ lost 351, 1.5%. And the S&P down 35 points. The Russell 2000, 0.90% pullback down 24 points. All right, as I mentioned, I want to talk a little bit about some of the other big tech names that weighed on the NASDAQ today. And one in particular, this was just a disaster today, and that was Advanced Micro Devices, right? The stock just could do no wrong up until recently. Unfortunately, today was one of the worst days it's had, actually going back to, I believe, 2017. Stock lost $41.92, a 17.31% decline to $200.19. They had a nice earnings beat. They beat on expectation. They delivered a first quarter upside guidance, but there was a few things in the report that I don't have time to go through that the company announced. Their CEO was all over the news channels today, CNBC, Bloomberg, etc., talking about, basically things are great, right? No problems at all. But boy, the traders did not believe it for 1 second. It just never recovered. Open week and just got weaker throughout the session. Let's see, NVIDIA, another down day for that stock, $6.15 loss to $174.19, 3.41% decline. As I said, Apple was a strong one, $7 and a penny gain, $276.49. And they're finally starting to nibble a little bit at Microsoft. It's been on a nice downside sell trajectory. Stock finished today up, though, $2.98, 0.72% to $414.19. Moving things over, as I said, Amgen was the star of the Dow. Again, about a $27.61 gain was the closing level. Again, as I said, in after hours, now it's pulling back a little bit, but $27.61 gain, up 8.15% to $366.20. But the absolute star of the day was Eli Lilly, symbol LLY, $104.29 gain, up 10.39% to $1,107.75 among the top performers after an earnings beat. On the economic side of things today, not the most exciting reports. We had the ADP private sector report come in, showed the private sector gained only 22,000 jobs in the month of January. That was nearly half of what Wall Street was looking for. Wall Street was looking for 43,000. The December data was revised to 37,000 from 41,000. So we're kind of stagnant on the job growth side of things. And by the way, I want to mention, We were supposed to get the non-farm payroll numbers this Friday. Government postponed it because of the temporary shutdown, which is now over with. But they came out today and said February 11th we will get the non-farm payroll numbers. All right, next report we had today was the ISM non-manufacturing report. Remember, you want to read in above 50. We got 53.8. The prior month, December, was revised to 53.8 from 54.4. Key takeaway from those reports is that the activity in the service sector grew at a relatively steady pace in January, and at the same time, prices paid for materials and services have increased. Oh, that's what we call inflation. You did have Scott Bessent, our Treasury Secretary, testify in front of Congress today. Biggest headline away from there is he said, tariffs do not cause inflation. I wonder if he looked at this report too before he made that statement. The other one I wanted to mention, usually I don't throw this in the mix, but it's pretty important. The Mortgage Banker Association Mortgage Application Index. So this is the prior week's mortgage application plummeting, down 8.9%. Week before that, down 8.5%. So, again, as we hear from the boys on Tuesdays and Thursdays, people are just sitting on the sidelines right now, just not real excited at where these rates are and other different factors. So that was not a good report today. All right, with that said, let's get into something you can control. And that something you can control is your estate. What happens if you don't have a plan? Well, this is what we're going to talk about. Many of you may not understand the importance of estate planning. As I said at the beginning of the show, what many people think is, you know what, John, I'm not wealthy. I'm only worth a couple $100,000 or got a few bucks in the bank, a few bucks in my 401k. I don't need an estate plan. That's for the wealthy people out there. And the answer is absolutely not true. Not true whatsoever. In most cases, if you have more than $40,000 in assets, you probably need a living trust. But there's other scenarios, as you're going to learn. If you have children, in my opinion, you probably should look at having a living trust versus a will. There's a number of different situations. It's not just about the money that you have. And also, I should mention, it's also the components that you usually will get when you have a living trust, like a pour over will, right? That's used, of course, for assets that you didn't and you couldn't title under the name of the trust. So let's say you've got a favorite firearm, right? And you don't want it to go to probate. So your pour over will is going to catch those things. I call it like a fishing net. It catches things that you were not able to, quote, fund. Now, what's funding? That's where we take an asset that we have a title to, like our home, bank accounts, brokerage accounts, and we change that name into the name of the trust. That's called funding the trust. Now, what a lot of people don't realize, as I'll get to in a moment, if you spend all this time and money to create a living trust, but you forget, or most commonly, your attorney forgets or fails to tell you that you need to move your house into the name of the trust, or that brokerage account, or that checking account, or some other account where there's a title to, guess what? It's going to probate. If you're titled joint tenants, rights, or survivorship, or if it's just in your name, it is going to probate. National statistics show that probate costs about 10% of the estate value by the time you pay the attorneys and you pay the court system and so on and so forth. But what's even worse is that no one can touch your assets. Let's say you have a bank account that goes to probate. How's whoever you've named to take over your estate, your executor, your trustee, co-trustees, whatever the situation may be, how are they going to make your mortgage payment and pay your other bills if they can't get their hands in your checking account? It's locked up. It's going to probate. So these are the kind of things that, again, we're going to be talking about. So let me kind of start off with the first thing, which is what estate planning really is. You see, estate planning is not just about, again, who's going to get your stuff, to be real casual with you. Who's going to get your stuff when you die? Estate planning, in my opinion, is about control. It's control while you're alive. It's control if you're incapacitated, and control after you are gone. It's not just a will. A will is a part of a trust. But it's also, as I keep saying, it's not for the wealthy. And it's definitely not something that you set and forget. Whoa, that's a lot, isn't it? Kind of take into consideration. Let's kind of break that down. It's not a will. A will is nothing more than instructions to a probate judge, right? You can write a will. In most cases, it has to be notarized, and depending upon what state you're in. But a will is nothing more than instructions to the judge. So a lot of people think, I wrote a will. Great. Okay. What does that do? That just tells the court system where you want that asset to go. But the court system still makes the ultimate decision. I shared this story with a client the other day that you can write a will. And believe it or not, you can write a will on any document. It doesn't have to be an actual legal document. You can literally, as the saying goes, you can write a will on a cocktail napkin. You can be sitting at a bar and write your will out right there. And again, if you're in a state where it has to be notarized, well, okay. But if some states don't require notarization, but a will is nothing more than instructions. But guess what? A judge can still overrule what you put in your will. So let's say you got let's say you're a single person, you got a high school buddy that, you guys are just best friends and you go, hey, dude, if something happens to me, you get everything. You put it in a will. Well, guess what? You die, goes to the probate judge. Probate judge says, wait a minute here. But first of all, you got a bunch of bills that are due, so we got to get those taken care of. So then the court appointed trustee is going to, start liquidating your estate and paying those bills off and finally get everything done. Then whatever's left over, the judge is going to go, okay, your buddy you put in your will, you said you wanted him to have everything left over. Oh, out of the woodwork, here comes a sister or a brother or a relative or a friend, somebody out of the woodwork. Guess what? That judge could say, nope, I know you wanted it to go to your good buddy that you grew up with, but my goodness, your sister, who is bloodline, I think she should get 50%. And your brother, he's 50% bloodline. I give him the other 50%. So your wishes did not even come true because a will is left ultimately up to the decision of the probate judge. So again, major misconception that a will is going to take care of everything. It's not. Definitely not for the wealthy, as I keep saying. And it's definitely not a set and forget. I just had a situation a couple days ago, actually twice last week, where clients thought that their trusts were up to date. And after I did a little bit of probing, they were not. They were very old. And so therefore, we are in the midst of repairing those trusts for them, restating those trusts for them. Because many times, especially if you create your trust years ago or in other states, many times those state laws where it may have been written originally do not apply to the state of Nevada or whatever state you may reside in. So that's another misconception. But also the age thing. Now, we always tell our clients, you should have your trust looked at least once a year or when major life events happen. What's a major life event? Death, divorce, a birth of a child, major asset acquisition, major asset selling, those type of things. Those require a trust to be restated. So it's really simple to do that. We just do that through an amendment. But the problem is people get their trust done and they think, man, high five myself or high five your spouse. Hey, it's great. We got our trust, honey. Perfect. But remember this, folks. A trust is a living, breathing document. It needs to be looked at all the time, and especially when major life events happens. Even if no major life events happen, you should be sitting down and reviewing that trust with your trust advisor. Like I said, at least on an annual basis, worst case every 2 years, because tax laws change. The biggest change that I went through years ago with clients is when HIPAA came around, right? Many trusts did not have HIPAA. So what happened? Client would get, and I had this happen with a client, so I'm speaking from personal experience real quickly. Client did not have a trust. I pushed them. They didn't get it done. It was literally sitting on, they finally got to an attorney. The trust paperwork was sitting on their kitchen table. The husband had a brain aneurysm on a Sunday afternoon. The wife calls me and says, hey, so-and-so's in the hospital. We don't think he's going to make it. I said, did you get the trust done? Nope, we started it, but we never finished it. Well, thank goodness we had a really good attorney involved, and that attorney was able to go to the hospital, get a medical directive created very quickly, et cetera. Because otherwise, those doctors, remember that thing called a Hippocratic Oath? That's their job and responsibility is to keep you alive. If you didn't want to be kept alive, you better have it in writing. And that's what a medical directive, another component of an estate plan, does. So you see, there's so many moving parts to an estate plan. And that's why I say it is not a, set it and forget it type of situation. You must keep it alive and constantly keep monitoring it. All right. Why having nothing is worse than not having a bad plan? I'll share that with you when we come back. Let's turn it over to Jack Sabin and news, traffic, and weather. Hey, Jack. Back to the Jon Sanchez Show on News Talk 780 KOH. Once again, if you just joined us, we have had a 260-point gain on the Dow. Nasdaq lost 351, S&P down 35, and a 24-point decline on the Russell 2000. All right, we're talking about what happens if you don't have an estate plan, the importance of it, breaking some misconceptions like, I got to be wealthy, or I need a bunch of assets, or I need this or that. Oh, no, not the case whatsoever. So first point I went through is what estate planning really is. Again, it's not just about who gets your stuff when you die. It's about control. Control while you are alive. Control if you become incapacitated. Control after you are gone. And it's not just a will. No, and it's not just for the wealthy. It's definitely something that you don't set and forget. Okay. Now, let's go to the next point. Why having nothing is often worse than having a bad plan. You see, when you have no plan at all, well, that's okay because someone else has a plan for you, and that's the state, right? State always has a plan for you. That's called probate court. But guess what? Probate court does not know your family, doesn't know your values, doesn't know your intentions, doesn't know what your legacy is. And so by having a bad plan, which sometimes, by the way, can be fixed, it's absolutely worse. No plan guarantees delays. higher cost, family stress, absolute worst possible moment. You ever been involved with the death of a friend or a family member? The last thing in the world you feel like dealing with at that point is money, right? This is always a challenge for us when we have a client that passes away. We always try to separate, like, look at nothing we have to be urgent on that we got to take care of on the monetary side. Focus on, if it's a spouse we're dealing with that lost a spouse, focus on the healing and all those other things. Also, we tend to not make really good financial decisions when we are under stress after the death of a loved one, right? It's one of the most tragic things that can happen in life. So I always tell our clients, let's relax for a little bit. We're watching everything. Again, go focus on healing and a new life and all the tough things and tragic things you have to go through once you lose somebody. Again, it's it's a situation where having no plan absolutely guarantees the probate delays, as I said earlier. It absolutely guarantees higher cost, like I said, because it's going to probate. The attorneys and the courts are going to win. And most importantly, the family stress, right? Family members that fight. It's like, no, mom and dad or mom wanted me to have this item. And your sibling says, no, mom wanted me to have that item. And you're fighting among your siblings when, again, everybody should be healing, right? Just having a simple estate plan will solve all that in many cases. Okay, I'm going to go a little bit deeper into something I keep harping on, and that is the biggest misconception. I'm not wealthy, so therefore I don't need an estate plan. Absolutely not the case. You see, what a lot of people don't realize is estate planning isn't just about wealth. It's about your responsibility, the responsibility that you have to your home, to your kids, your grandkids, your great grandkids, if you have those, your retirement accounts. And most importantly, simply, it's your concern and your responsibility not to burden your family. And you can do that really simply by having an estate plan. It really is. Middle-class families are often hurt the most because they assume that the estate planning rules don't apply to them, right? People think, oh, again, I don't have wealth and I don't know, everybody has a different definition of wealth. I've heard people say, oh, I thought you needed a, $250,000 or 400,000 or $500,000 or $1 million before you needed to get concerned about estate planning. It's absolutely not true. Because as I'll go through here in a moment, there's so many other aspects besides just the money side of things. Think about this for a second also. You work your whole life to save, invest, build assets, build a beautiful family. Do you want the court system to decide where all that goes? Or do you, while you're of right mind and sound mind and, living your life, make the decision? It's really what it comes down to. It really comes down to that. Do you want the courts to make the decision for you? Or do you want to make it while you are alive and of sound mind? That's really simple. So again, please do not fall into that trap or that misconception that you need to be wealthy. Absolutely not true. What happens when beneficiaries, titles, and intentions don't match, right? We see this a lot. Well, this is one of the most common and dangerous mistakes. Your will, which again, a will is part of a trust package, okay, or part of an estate plan. But of course, you can go purchase a will or create a will on your own, which again, in many cases is not recommended. But your will might say one thing. Your account beneficiaries and your property titles could very often override that will. So let me give an example of that. So let's say you decide you don't want to, spend the money and create a living trust. And let's say you have a house. Okay. And again, estate planning is not extremely important. I mean, it's important, but not extremely important as it is when you have one spouse remaining, right? When you have two of you, all right, the other one usually just picks up and runs with the pieces. They change titling from joint tenants of your real estate or your bank account to just their name. Okay, so let's make that really clear. But here's a situation. You might say one thing as far as account beneficiaries. So as an example, your IRA, you may say, especially, and we see this a lot with blended families. Let's say you, from a blended family, you listed, what was your wife is now your ex-wife. We see this all the time. You don't want that, most likely, unless you're under court order to do that. You probably want your new wife to be listed as beneficiary. Okay. Now, when we can name beneficiaries on accounts such as IRAs, 401ks, life insurance, those type of things, estate planning is not that critical until we get into disbursement of the proceeds. From a titling, not that important, right? You own it, like an IRA, you own it. You name a primary beneficiary, which is the first person your money is going to go to if you die. Usually it's going to be a spouse. And then you name contingent beneficiaries, which usually are your children. That means if something happens to you and your spouse, then the money results go to them, right? So maybe you have 3 kids, and so you're going to go 34, 33, 33%, and they get the money, no questions asked, right? We disperse them to beneficiaries all the time. But when your property title is different and your wishes are different than what your will is saying, that's when things really get confusing to people. And frankly, this is where the court system does a great job and they step in. So you write a will and you go, let's say you're a single person or a widow. You were married, but now you're a widow. And let's say you decide that you have this house, right? It used to be joint tenants, but now it's single ownership, right? It's just under your name because your spouse passed away. But you wrote in your will that if you die, you want that house to be sold and the money to go to your two children. Well, guess what? I see this a lot. A widow, a lot of times, not typically, but a lot of times, will add one of their children to the title of the house, right? It's called TOD in one situation. Another is they actually make them joint tenants. Well, think about this. Let's say you had a couple, two or three kids, right? But one of them is your favorite. One of them is the one that's really helping you out, get through life after you lost your spouse. And so let's call that person Sally. So you have Sally, maybe Sally's living with you, right? Helping take care of you in your older years. So you go, hey, Sally, get on the title of the house. That way when and this is what I hear all the time, when I die, that house is going to be in your name and then you can sell it and disperse it to your other two siblings. Well, again, we can have a problem if the will says something different. But we also can have a problem, and we have no legal ground to stand on. If Sally, after mom dies, Sally says, I'm going to sell the house. That's what mom wanted. But guess what? I don't like those siblings. I never did, never will. I'm going to keep all the money. Guess what? Legally, she can. Now, could it be challenged in probate court? Absolutely, it can. If you had a living trust, that house would be titled in the name of the living trust. Mom says, I want a 34, 33, 33% ratio. No questions asked because the house was already titled in the name of the trust. See how simple that is and how messy it can get when we have titles that are different than our estate planning wishes. More to come. Let's wrap it up with Kristen Snow right now. Traffic Center. Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Pleasure to be with you this Wednesday afternoon. We've been talking about what happens if you don't have an estate plan. All right, let's go to my fourth point. I got 10 of them, so I'm going to see if I can get through all of them. So what happens, or actually, let me go to the fifth point. I'm sorry, let's cover that one. Why probate is expensive, low, and really probably one of the most important things, absolutely emotionally brutal. Well, as I touched on earlier, probate is a public court process, right? Anybody and everybody can come and listen to what goes on in your estate. Everybody can be there. A courtroom can be packed. But beyond that, it's a process that also takes weeks, months, sometimes years, especially when, it's a large estate, right? That's gone to probate because there was no living trust. It costs real money. You're paying attorneys, you're paying the court system, etc. It invites conflict. Anybody and their uncle can come out of the woodworks and go, hey, you know what? John was a great guy, but man, I remember sitting at the bar having a few, Coronas with him back in 1982, and he promised me $1,000 or $100,000. That's called challenging the state. Now the court has to decide, is that guy true? Is he telling the truth? Did John lie? You get my point. Anything in the world can happen in that packed courtroom. And remember, folks, all this is happening when your family is grieving. Even when everything seems to be going smoothly, it's a headache that most families absolutely never expect, right? They think everything's taken care of. Do a poll among your family. And I bet you they're going to say, oh, of course, mom and dad, you have your estate all in order. I know that. You're astute financial people. Well, hopefully it is. But if it's not, it's time to do some things about it. Number 6, the danger of outdated documents. Oh, my goodness. Life changes fast, right? We have all kinds of things that change. We have marriage, divorce, kids, grandkids, buy assets, sell assets. Estate documents that are 5, 10, 20 years old, sometimes even 2 years old, absolutely do not reflect the reality of where your life is at this particular point. So I have a little saying, old plans don't protect families. Old plans create surprises. Number 7, why beneficiary designation can override your will. You see, retirement accounts, life insurance, and again, some bank accounts, if they're titled TOD, can pass right to a beneficiary, as I mentioned, not by will. If those are not updated, your wishes may never matter. This is one of the biggest silent mistakes that people make, right? They go, okay, grandchild Johnny, I want $20,000 out of my bank account to go with you, and that's what you put in your will. But what if you had a beneficiary named on that? Let's say it's an IRA account, not a bank account, but an IRA. But you have somebody else named as beneficiary. Remember, your beneficiary is going to be the one that determines where the money's going to go, not your will. But what happens if Johnny's an adult and comes back and challenges the trust or challenges the estate? Guess what? There's probate court. The role of incapacity planning. Oh my goodness. As I said earlier, an entire trust package is not just a trust. It's a pour over will. It's a medical directive, a power of attorney, and many other documents. You see, estate planning is not just about death. It's about life. If you're alive, but unable to make the decisions, who's going to step in and make those decisions for you? right? If you have a spouse, okay, perfect. Do you have anything in writing that spouse can show to the doctor? What if you're single? Who's going to make those decisions? Well, the bottom line is without proper planning, families may have to go to court just to help you. That's a nightmare no one wants. I know you don't want. Estate plan will take care of that. So what do? We got to make a list of our assets, our accounts, our beneficiaries. Talk with your spouse, talk with your family about your intentions. Review the documents if you already have a trust. Organization alone puts you ahead of so many people. Keep a list of all your passwords, your cybersecurity, cryptocurrencies, anything that's kind of cybersecurity. Keep a list of that. Keep it in a secure location. And remember this, folks. I'll wrap you up with this. Documents are only as good as they're designed. They're only as good as they're explained. They're also only as good as how they're maintained. Cheap or DIY solutions often miss the real-world issues that many of you and your families face. Real protection means clarity, it means coordination, and plans that actually work. As I always tell people, you never know or gonna know how good your plan is until you're gone. So ensure that your plan is in place. So God forbid, if and when something does happen to you, you're taken care of, and all your wishes are held to. Again, if we can be of assistance to you, give us a call, 775-800-1801, online, SanchezGaunt.com. God bless. Have a great afternoon. We will see you tomorrow on the Jon Sanchez Show. Take care.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.